It's not every day that a $44 billion lawsuit gets lobbed at a mining company. All that and more on this Energy and Materials edition of Industry Focus. Greetings, fools. Sean O'Reilly here at Fool Headquarters in Alexandria, Virginia. It is Thursday, May 5th, 2016, and joining me in studio, as always, are Tyler Crow and Taylor Muckerman. What's the good word, guys?
Oh, the bird.
The bird? The bird is the word?
Yeah.
That's probably one of the top 5 Family Guy episodes for me. We're really letting the audience know that we're millennials right now. But anyway.
Not only millennials watch Family Guy.
You know
it's
what?
a far-reaching audience.
That's a good point.
It's old enough now to where
it's broad and diverse.
It's been around long enough that somebody's had some exposure to it at some time.
Actually, on that note, do you guys hear that Fox ordered from Seth MacFarlane this is going to come out in like a year or two, a live-action comedy space exploration show?
Why not?
Sure. Why not? Indeed.
Live action comedy.
It's going to be like a comedic Star Trek or something. I don't know.
With real people.
Yeah. He's going to star in it too. Seth MacFarlane's going to star in it.
Good for him.
So hopefully
he's
he'll
more
sing.
than just a voice.
Yeah. Hopefully he'll sing too. So obviously the big news of, I think it was last week, was the Halliburton and Baker Hughes merger breakup that everybody saw coming. Taylor, you did a heck of a job covering that on Market Foolery, though.
Well, thank you.
We won't talk about it too much here today, but I think the best way to sum it up is everybody saw it coming, and somebody just wrote a huge check. But if you're interested to learn more about Taylor's thoughts, check out that episode of Market Foolery. When did it air?
It was Monday.
It was Monday.
So the 2nd, May 2nd.
Cool.
Yeah, and that was actually, I think, was that your like bold prediction for 2016?
Yeah, it was. Yeah,
Good for you, Tyler.
Which wasn't that bold, but
I mean,
bold enough. It took 4 more months before they announced that it was off the table.
That is very true. Yeah. That man. How long did that start to finish? How long did that get dragged out?
A year and 6
year and
months.
a half.
Yeah, 18 months popped in my mind. So
because it was November 2014.
Yeah.
When they announced
it was right just about when like OPEC decided they were going to hold production, when everybody's like, they're going to cut.
Yeah.
Right.
And just before that, Halliburton-Baker Hughes were like, we're going to get together. We're going to manage this just fine.
Yeah, unbelievable. So earnings season is upon us, and Royal Dutch Shell just reported earnings. Profits fell, unsurprisingly, 83%. They vowed to cut costs more, though.
Well, every single time in this downturn, companies have been saying they've been looking to cut costs. This is the very first time we got to see Shell, or Royal Dutch Shell, as the combined entity with BG Group, which it acquired last year and now has finally actually brought it into the fold. So we got to see the whole brand new Shell, all the fancy new things that they're doing.
All the bells and whistles.
But not surprisingly, though, is that with that release, new look, same pretty meh results. I mean, obviously, they're going to have a really hard time when it comes to generating profits from its upstream side of the business. And one of the interesting things when you go through the actual press release and go through the figures that they released, they started breaking things out a little bit more comprehensively, and it gives you a better look at the numbers. One thing that I did find kind of surprising was in the upstream numbers is they broke out integrated gas, which is like everything related to LNG. And we were looking at upstream earnings for these companies being pretty weak. And when you actually pull out the LNG component of its upstream earnings, the rest of its production portfolio looks even worse.
Wow. What I was just surprised because I assumed that they were bare bones in terms of cost cutting already. So I don't know what else they're going to do.
The idea is there is a lot of overlap between some of the positions that it has with BG Group in places like Brazil, Australia, and other various places where they can, consolidate some of the probably administrative work, a lot of cost related to that end of things. So, aside from the typical cost of deflation that you get from service contracts and things like that, they believe that there is still some cost to be wrangled out of it, which, we're not going to see yet. The merger officially only happened a couple of weeks ago, and a company that size, it's going to take a few quarters to kind of work the kinks out of it. But
really integrate it.
We'll see. It's one of those things where you have to kind of wait.
They did say they feel like they're further in advance in the merger than they originally had planned on being, but at this point, in terms of like synergies probably going to be brought forward a little bit sooner. So we'll see.
Cool.
They put the pressure on themselves to another degree, I guess. Not a huge degree, but they did say expect synergies sooner than we thought.
Yeah.
Which is kind of refreshing for Shell, Royal Dutch Shell. It's never been, of the big oil companies, it's never been the one when people think about like the really disciplined capital spender and the low, really trying to be the most profitable and cost conscious possible. That reputation has always pretty much gone to ExxonMobil. Shell has always been the technology driven growth through production, trying to do the things that are really, really beyond the horizon. Alaska, going into the Arctic and things like that. And so it's kind of refreshing to see them take this approach now where we're actually going to focus more on being a profitable company.
How difficult do you think that'll be for them?
Not
to even break even right now.
Not easy. And in some ways, it's a lot of the positions that it has taken over the years has been in what we would consider more expensive oil projects.
Yep.
You look at LNG, you look at deep water. It looks at doing the big, upfront, expensive things. And when you have that, once they become a legacy productions, you have something that's been online for 5 to 10 years, those per barrel production costs go down. But bringing it on initially, it can be quite expensive.
And you mentioned LNG, and it looks like their liquefied natural gas sales were up 25% year over year. So good to see an area of focus for them actually doing well, especially an expensive area like LNG has been for them.
Yeah. So moving on to another earnings story that's actually probably more surprising. Tesla just reported they're going to ramp up production to 500,000 cars a year 2 years early.
Don't you raise your eyebrow when you say that.
It's my favorite.
It's crazy to think, yeah.
Yeah, no, my favorite line in it was they were not so specific at all. It was just this one sentence, and I'm paraphrasing here, but they're just like, yeah, this is going to require more capital. I'm like, you think?
Yeah.
Does that imply a share issuance at some point again, or maybe Elon Musk will just write another check? Or
keep in mind that 500,000 is like 10x what they produced this year.
Right.
So this is a huge deal, and like you said, they're bringing it forward by 2 years. And not only are they bringing it forward by 2 years, but then those 2 years that they lopped off at the end, 2019 and 2020, they expect to maybe maybe double from 500 to a million.
Yeah.
500,000 to a million. Is that what they said?
Yeah, I believe that's actually total cars produced, not an annual production.
Okay.
By 2018, they are going to have produced 500,000 total cars that are going to be mostly the Model 3. That the big push that they want to do here is pushing the Model 3 forward and really getting it to market, because we're starting to see some of the larger Detroit automakers like General Motors come out with the Chevy Bolt, and they're going to make a big push on that. And so I guess the best way to explain it is to say that Tesla didn't want to get left behind. Tesla has not exactly been the most timely company over the years. Everything has seen some production delays. Ramping up has been slower than expected. So for now that its competitors are taking it more seriously on the electric end, it's the pressure is on now for them to deliver on that.
Well, and the reason I was really surprised with this release and how essentially aggressive it was, because I don't know if you guys caught this, but they just had 2 very high-level executives leave.
Coincidentally, on the exact same day that they can decide they're going to move production up by 2 years.
So odd.
And one of them was the chief of production.
Both of them were production people.
Yeah.
So there's a piece over on Bloomberg, 2 Tesla production chiefs leave ahead of Model 3 ramp up, and it was Greg Reichow, R-E-I-C-H-O-W, I'm totally butchering that, Tesla's vice president of production, and John Ensign, vice president of manufacturing, will leave the company. And then a person familiar with the situation who isn't authorized to speak about the matter said the executive changes are linked to delays, glitches, and a recall that has bedeviled the Tesla Model X. And that wasn't in the release that just came out. They said that Model X production was finally ramping up or something like that.
Yeah.
So I don't know. What a coincidence, though. Those 2 guys are gone, and then...
we'll see if it's a coincidence moving forward.
Right.
If it was actually their fault and they were actually separating the wheat from the chaff.
I have to think that these were smart guys, and if they were having a hard time, is Tesla reaching a little bit here with its goals?
Did it specify if they left or if they
has
were
it ever-
forced
Well,
out?
nobody ever says. One of the reasons for, I think it was Josh Ensign, was personal reasons.
Well,
you know.
yeah, I mean, he could have been doing an all right job, just wasn't comfortable with the stress factor of moving this forward 2 years. And
Which
as
also
you've
wouldn't be
s-
surprising
yeah.
given what we've heard.
And
But
as you've seen, these tech companies, you see folks jump from company to company. So I'm imagining that these two folks aren't going to be hard up for work.
Right.
Now that they've announced their
they're gonna-
freedom from
they're
Tesla.
gonna go work on the Apple car.
Apple Car, they could go work for any number of car companies that are trying to go electric or autonomous or both. Yeah, I think they'll be all right.
I caught this just before we went on air. GM and Lyft are, and you remember, of course, GM invested $500 million in Lyft a couple of months ago. They're going to be test driving self-driving electric taxis in a soon-to-be-named city.
Yep.
Would you ride in one? I would.
Absolutely.
Yeah.
And probably not the first,
Right.
but and
I'll wait till maybe the third or fourth
Yeah.
before I jump in.
The third or fourth city or the third or fourth car?
Third or fourth car.
third or
yes.
fourth car. Yeah, I want to have a buffer zone between me and there, so we get like a presidential motorcade going.
I'm
But,
really curious what this will cost for just to go a couple of miles or something. Because if you're not paying a human driver, I mean,
It's interesting because I've seen and read other places being like, you have to basically 3D map the entire city, and people think that we're a decade away from that being done on a major scale. So I would imagine it's going to be a small city.
Right.
It's not going to be a metropolis. It's going to be you know a rural like small capital from a smaller state or something like that. But and Google just signed a deal with Fiat, I think, to produce some autonomous driving vans, delivery vans. So there's going to be some of those rolling around somewhere.
It is almost fascinating to think of how rapidly this is progressing.
Yeah,
Like,
the cars have the technology. It's just if the streets do
But-
is the big deal.
you know, if we were to take a leap back to 2008,
never would have dreamed any of this.
if you had said in 2008, Tesla Motors is going to, by 2018, have produced 500,000 cars.
It'll
It's
be
gonna have
worth $40 billion.
This is the same time where they were struggling to produce the Roadster, and
Yeah, the
Elon Musk
Roadster.
was like forcing more liquidity into the company
Right. Yeah.
at multiple times in 2008.
So 2008, you go, Tesla Motors is going to build 500,000 cars. They're going to have a family-friendly-esque like sedan and the $35,000 entry-level luxury
Don't forget the
price
Falcon
range.
Wings. Don't forget those.
Yeah, that's
You know, an SUV, and everyone in Detroit is going to try to chase and catch up with them, or in some ways might be ahead of them with certain offerings. And at the same time, on top of that, you're not going to drive your car anymore. We're just going to let a robot do it. The advancement in the past 4 or 5 years in the automotive industry is staggering, and like you say, kind of removing the wheat from the chaff here. This is going to be one of those times where somebody is going to step up to the plate big time and make a lot of money. It doesn't mean that everyone in the space today is going to be as
If this
successful.
driverless car thing really catches on, I have to think that that's immeasurably bad for the big three automakers.
Well, so I saw something from the CEO of Ford, and he's saying that, yes, we might produce less cars, but these cars are going to be used much more than they are today.
So
So
they'll
the
make more
vehicle
on
miles
service
driven,
revenues
the
and-
vehicle miles driven will probably amplify, and so these vehicles will be running
That's a really good point.
to the higher
Yeah.
mileage counts much sooner. So yeah, they're thinking that service might save the day if production numbers drop, because right now your vehicle sits idle while you're at
Well-
work, while you're at home, and so in the perfect
I have a
world
really
for
good
these
story to-
EVs and autonomous cars, they're never going to park unless there's just absolutely nobody that wants to do anything.
Right. I had an Uber driver, and this was a couple of months ago, and very nice gentleman. He had one of those new Priuses, like the futuristic internal, looking ones, and said, "Oh, this is a nice car. How many miles are on it, or whatever?" He says, "Okay, so I'm going to give you a little bit of background first before I have you guys guess. Not only does he drive this full time to
Yep.
make money on Uber and everything, but his two brothers do. You have 3 men,
So they got the
using
night
this car
shifts, the
full
morning shift.
time
Yeah.
to make a living. Guess how many? It was just over a year old. Guess how many miles were on this Prius?
120.
That's good. I'm gonna say I'll go 95,000.
208,000 miles.
And that was just in a year. So that's a perfect example of what an autonomous
right.
taxi cab is capable of.
The car never had any downtime.
Yeah, no.
One of them worked from like 8 a.m. Isn't that crazy?
That's full utilization.
I was like, you're destroying this car.
And they're getting their money's worth.
Yeah,
They
for
definitely are. So yeah, I don't know. So other big story, and I have to confess, I wasn't aware that the dam, this story was as big as it was, but BHP Billiton Vale might be facing a Deepwater Horizon type event with what happened with BP a few years ago. But huge dam broke in Brazil, and I didn't know it was like that big. But $44 billion has now been the bill's been sent to him. Like
This is a story that probably has been a little underreported. Perhaps
the American media didn't report it.
perhaps
Well, now
because
they
it's
have-
outside of the United
now they
States.
Well, that
but-
and they have the Canadian wildfires now that are
Right.
going on and wreaking havoc in the energy industry. Up
Way
there.
to plug Canada.
Hey,
Oh, Canada.
Stock Advisor Canada.
Yeah.
Got to look out for my people.
Good job.
But back in November, kind of getting back to the Vale BHP thing, there was a mine. It's Samarco mine in Brazil. They had a mine tailing dam. Basically, it's when you have an iron ore mine or any type of mine, you're going to have some sort of place where you have mine tailings, all of the reject and waste that's related to the mine, and that mine or the dam holding back tailings and all of kind of the liquids.
This is wastewater.
Wastewater
This is not
Nasty
from a mine,
stuff.
really nasty stuff.
Yeah.
It broke, and for 400 miles, a river
Yeah,
in this southern part of Brazil, I believe it was called Minas Gerais, it basically ravaged 400 miles of a
19
river.
people died. They're talking about like it took a month or whatever for it to finally just kind of ooze out into the
Right.
ocean. I mean,
So on a
They say dilution is the solution, but not to
Not
this
here.
degree.
So when you kind of putting that into context, there was this kind of weird pause for BHP and Vale in the sense of, oh, this is bad. We don't know how bad it's going to be, but it's probably going to be pretty bad. And about last month, they got a bill from it was more like a cleanup cost sort of thing, not
Yeah.
a civil litigation suit. And it was looking like it was going to be manageable. It was something like $1.5 billion, not something that companies the size of BHP Billiton and Vale could handle relatively easy. However, with this potential litigation, as much as $44 billion, that is one of those giant killer kind of litigation things, and something that is always a major risk when you're investing in not anything that involves the exploitation of natural resources. We saw it with BP in 2010. I don't think anybody could have necessarily quantified in the moment how much this was going to be. I mean, you knew it was going to be bad, but I think on BP's most recent quarterly release, they said, we have spent $56 billion, and that's going to be like the total bill that they think it's going to cost for the 2010 Deepwater Horizon spill. So when you kind of put that into perspective, that sort of incident could be a giant killer for Vale or BHP.
the share prices. I was checking out Vale at least before we came down here, and it was at $4 then, and it's at $4 now. Like it's not.
Some of it may be priced in. Vale does have some ties to the Brazilian government, very similar to Petrobras does. So it's hard to say.
They might not want to kill it, is what
Exactly.
you're insinuating. Yeah.
And it's the same thing when it came with BP too. When it comes to these penalties, you want to get the money, so you don't want to break the company that you're doing it. It can really cripple it, but in terms of payments, but you don't want some sort of litigation or anything like that is going to completely bankrupt the company.
Right.
Full stop. Right in that moment.
because there are people
you
with
want to get
jobs
paid.
and- yeah.
You want to keep people employed. I mean, look at Volkswagen right now. The amount of money that they're putting aside is certainly probably not going to be all the amount of money that they're going to have to spend on it. But over time, as they still generate earnings, they're going to be able to pay it off.
Right.
And that's been the same thing with BP. They didn't put $56 billion away
Immediately.
Immediately, it was over time.
Man, so we've got a mailbag question that was actually tweeted to us on April 27th.
A millennial mailbag.
Millennial mailbag, that is right. But Drew Morris on Twitter tweeted at us at MF Industry Focus. Question for the energy team. Which is a better buy today, Kinder Morgan or Spectra Energy? Who wants to go first? Dun, dun, dun.
I'm going to just say Spectra Energy. That's the company I own of the two.
Conservative choice.
Higher dividend. I like the regional focus and the resource focus of natural gas in the East Coast for the most part. For Spectra, they do have some West Coast operations in Canada, but I like the narrower. It's not a narrow focus by any means because it's one of the largest pipeline companies in in North America, but it's a more narrow focus than Kinder Morgan is. So that's why I personally like it better. And then the dividend yield is much better as well.
Yeah.
When you look at the two of them, both are certainly. You couldn't call either of them what you'd call a bad investment. I think
Right.
this is kind of like debating between two pretty good companies, and if you were to pick one or the other, I don't think anyone's going to be completely unsatisfied with their choice in any way. But I'm actually kind of on the same page with Taylor, where I tend a little bit more towards the Spectra Energy side of things. And one of the reasons because of it is in their development, like their project pipeline and a lot of the existing business they have right now is in what is called the demand pull side of the midstream business, which is rather than being the company that gathers from the field, which is from the well and things like that. That's known as supply push, where you're taking everything from the supply and getting it to customers. Spectra Energy focuses more of its pipeline and distribution on the demand side of things. So they're going to be the ones connecting to power plants and connecting to individual homes through gas distribution networks that they have in Canada. And that side of things does have a tendency to be a little less volatile in terms of volumes and things like that. So it gives a little bit more of a stable outlook in terms of its earnings generating capabilities versus Kinder Morgan's does have a little upstream production, a little closer to the wellhead.
Tankers that they have.
Some tankers and storage and things like that. So with that sort of business model, and if you look at the way in which Spectra Energy is looking to grow in the next several years, with I believe it's another $20 billion in investments.
Yeah, and that's all $15 billion have already been spent. They had a $35 billion plan from like 2014 to 2020, and they're already well on the way. Yeah.
So with that much left and most of it dedicated towards that, we're going to serve the customer, the demand end of things. I think it does look a little more promising.
I like Kinder Morgan better.
Hey, like Tyler said, neither one of them is technically a bad investment.
It seems to me Kinder Morgan obviously cut their dividend recently in order to fund their expansion projects because Wall Street definitely is not throwing money at energy companies right now. But I do think the dividend will eventually get reinstated, and it seems
they still have a dividend, and they didn't cut.
Yeah, they've got a 2.9%.
They didn't really cut
right
the
now.
yield. I mean, the yield was never up there with some of the bigger yields in the pipeline space. So they just trimmed it to represent where their share price was and what their financials really look like. So it wasn't that they trimmed it to like 0.5% or 1%. Yeah.
It does. I'm interested to get some criticism if you guys have any. It seems like there's more upside with Kinder Morgan. As opposed to Spectra.
How so?
I mean, it used to be it's the largest energy infrastructure company in the country, and actually North America. It used to be at $40. Now it's at $17. Spectra, I don't think fell more than a third in this whole energy downturn.
Oh, you mean from a valuation standpoint?
From a valuation standpoint and stuff.
You could certainly make that argument, but I mean, if you're looking from a growth pipeline perspective, you could even say that Spectra has more upside
Even
simply
better.
because their development portfolio has remained robust throughout the entire time, whereas Kinder Morgan over these past couple quarters have actually been trimming their backlog of
Spectra
projects.
hasn't cut anything, I don't think.
Cool. All right. Well, thanks for your thoughts, boys. Have a good one.
You too.
If you're a loyal listener and have questions or comments, we would love to hear from you. Just email us at industryfocus@fool.com. Again, that is industryfocus@fool.com. And as always, people in this program may have interests in the stocks they talk about, and the Motley Fool may have formal recommendations for or against those stocks, so don't buy or sell anything based solely on what you hear in this program. For Tyler Crow and Taylor Muckerman, I am Sean O'Reilly. Thanks for listening, and Fool on.